By now, you've heard that the Atlanta Federal Reserve is forecasting negative GDP for the first quarter of this year. Well, just yesterday, they issued an update to their tool, and their tool now suggests negative 2.4%. Still a very negative number, certainly suggesting that a recession is very much a possibility. But the question is why? Why did their GDPNow tool drop off of a cliff like this? Well, if you look at the data, the answer is right there in front of us. As you know, GDP is the official measure of how our economy is doing. Since net exports is the current problem, let's zero in on that. Net exports is simply what are we exporting minus what are we importing. It's that change that is what's causing the massive drop in the Atlanta Federal Reserve's GDPNow forecast. So why the massive change? Well, if you've been paying attention at all, you know President Trump has been talking an awful lot about tariffs. We've done a couple of videos on this. I won't belabor it for now. For now, I want you to remember back in, I think it was 2008 or 2009 when President Obama was in office, one of the things that he was able to push through is a cash for clunkers program. You may remember that. And the idea was to stimulate the economy by encouraging people that were driving older cars to get them off the road and to buy newer cars, thereby stimulating the economy. So the question is, did auto sales go up because of cash for clunkers? The answer is yes. But what happened as soon as that program expired, auto sales went right back down. So is it possible that what we're experiencing right now in net exports is just the opposite? There's a lot of uncertainty right now in the international trade environment because of tariffs. So is it possible that international trade is going down, but as soon as all of the bluster and everything is over, is it possible, especially assuming if we return back to normal, is it possible that those imports and exports, it goes right back to normal? That is certainly possible. If you wanted, you could make a bullish argument for both the stock market and the economy. It would naturally be very easy to make a bearish argument for the stock market and the economy. But the reality is the stock market doesn't really care what you and I think. And our job as portfolio managers is to actively manage a client's portfolio. If we're in a good environment, we want to take advantage of that good environment. If we're in a bad environment, it might be best just to seek safety and just to protect the hard-earned capital of clients. If you have any questions, by all means, let us know.